Hello everyone, welcome back to Fundrise Finance. The last 1 month, we have seen quite a rise in stock markets. In fact, from June 16 till now, we see the market up more than 12.5%. This is a big run up. It could be a bear market rally, or maybe the stock market bottom is already in. We don't know. But as dividend investors, the only good thing that we can do is continue investing regularly into stocks which are undervalued and have good fundamentals. Because when the market runs up the way it has done in the last few weeks, you would not only see a good appreciation in the stock price, but also the dividends keep increasing regularly. Now, with that said, as we enter into a new month, it's time to talk about five stocks which I feel are very undervalued at the moment, in spite of the recent run up, and offer a good buy point even now. Let's check it out. But before jumping into the August picks, let's see how our dividend picks for the month of July have done in the last month. Here we had Citigroup, FedEx, Comcast, Goldman Sachs, and Medtronic. Of these, Comcast has been the worst performer, down almost 5% in the last month. Most of it coming just recent in the last week after it gave its quarterly results. Here we can see the Comcast stock dropping almost 10%. After that, we had Medtronic and FedEx returning identical almost 2.3%. And then we have the two financial stocks, Citigroup returning 10.2% and Goldman Sachs the best returning 11.6% in the last month. So finance stocks have been on a tear in the last month and these two stocks took full use of it. So among all these five stocks, I have picked one among them to be part of even the August dividend stocks list. Now which is that? To know more, please stay tuned till the end of the video. And now without any further delay, let's check our August dividend pick list. First we have Starbucks Corporation, ticker symbol SBUX. Starbucks is from the consumer discretionary sector and as everybody might know, is a specialty coffee retailer worldwide. Year to date, Starbucks had taken a real beating, falling almost 27.5% year to date. The last 1 month has seen Starbucks rising almost 11%, so it was able to pull down its losses for the year. The last 1 year, it's down almost 31%. The last 5 years, Starbucks has returned almost 55%. It has a market cap of $27.23 billion and currently yields 2.26% at a forward PE of 29.67. From a dividends perspective, Starbucks has been raising its dividends for the last 12 years at a 5-year growth rate of 15.11%, which is really good. It's almost double that of the current inflation rate. The payout ratio is 57.83%. And Starbucks has its ex-dividend date coming soon on August 11th. So if you own a share of Starbucks by August 11th, you'll be paid 49 cents per share on August 26th. Tracker dividends gives Starbucks a dividend score of 80 and considers it undervalued by 33.41% with a fair value estimate of $127.31. Morningstar considers Starbucks a 4-star stock with a fair value of $100. But as per my dividend theory calculations, which considers current and historical yields, I found Starbucks to be undervalued by 18.32% with a fair value of $100.31. In my opinion, I consider Starbucks a very good brand, and in spite of all the recent shortcomings, I think Starbucks will come out of it with good returns. The second stock on our list is BlackRock Inc., ticker symbol BLK. BlackRock is an investment management company and is the world's largest money manager, managing more than $10 trillion. So that's huge. Year to date, BlackRock has fallen almost 27%. In the last 1 month, it has pulled back its losses, up by 7.5%. But in the last 1 year, it's still down 23%. Last 5 years, though, it has returned more than 55%. BlackRock has a market cap of $101.02 billion and currently yields 2.69% at a forward PE of 19.9. From a dividends perspective, BlackRock has been raising its dividends for the last 18 years at a 5-year growth rate of 13.47%. Again, another company with its dividend growth rate much better than the current inflation. It has a payout ratio of 47.11%. Track Your Dividends gives BlackRock a dividend score of 81 and considers it undervalued by 24.73% with a fair value estimate of $889.09. Morningstar considers BlackRock a 4-star stock with a fair value of $850. But as for my calculations, I found BlackRock to be undervalued by 21.52% at a fair value of $813.16. I do own a small portion of the BlackRock stock in my M1 Finance portfolio, and I do intend to add to it at current levels. The third stock on our list is Morgan Stanley, ticker symbol MS. Morgan Stanley is also from the financial sector and provides investment products and services to corporations, institutions, and individual investors. Year to date, Morgan Stanley has fallen almost 16%. In the last 1 month, it has returned 7.7%, pulling back those losses. In the last 1 year, Morgan Stanley has fallen almost 12.5%. The last 5 years, though, it has returned an impressive 78.5%. Morgan Stanley has a market cap of $145.25 billion and currently yields 3.41% at a forward PE of 12.7. From a dividend standpoint, Morgan Stanley has been raising its dividends for the last 9 years at a very high 5 year growth rate of 27.6%. That's more than three times the current inflation. That's really, really impressive. There's a payout ratio of 37.29%, so even that's low. Tracker dividends gives Morgan Stanley a dividend score of 75 and considers it undervalued by 7.31% at a fair value estimate of $90.95. Morningstar considers Morgan Stanley a 4-star stock at a fair value of $96. As for my calculations, I found Morgan Stanley to be undervalued by 22.4%, the fair value of $103.19. Like BlackRock earlier, I own a small portion of Morgan Stanley in my M&A Finance portfolio, and just like BlackRock, I do intend to continue investing into Morgan Stanley at current levels. It's a very good stock to hold and in fact increase your position at current levels. The fourth stock on our list is Medical Properties Trust, ticker symbol MPW. Medical Properties Trust is a REIT, that's a real estate investment trust, that acquires, builds, and manages hospital facilities worldwide. Year-to-date, Medical Properties has fallen almost 26.5%. In the last 1 month, Medical Properties has been able to return almost 9.5%, so pulling back a lot of those losses. In the last 1 year, it has fallen over 17%. The last 5 years, it has returned 33.5%. Medical Properties has a market cap of $10.35 billion and currently yields a very high 6.61%. From a dividends perspective, Medical Properties has been raising its dividends for the last 9 years at a 5 year growth rate of just below 4% and a payout ratio of 60.43%. Track your dividends gives Medical Properties a dividend score of 37 and considers it undervalued by 32.74%, the fair value estimate of $25.63. Morningstar considers Medical Properties a 5-star stock with a fair value of $22.49. As for my calculations, I found Medical Properties to be undervalued by 23.61% with a fair value of $21.31. The fifth and final stock on our list is Medtronic PLC, ticker symbol MDT. We had Medtronic also as part of our July dividend picks. Medtronic is from the healthcare sector that manufactures and distributes medical devices to clinics and hospitals worldwide. Year to date, Medtronic has fallen almost 13%. In the last 1 year, it has fallen just over 29%. Medtronic has a market cap of $122.93 billion and currently yields 2.78% with a forward PE of 16.59. From a dividends perspective, Medtronic has been raising its dividends for the last 43 years. That makes it a dividend aristocrat, which means it's part of that exclusive group of companies which are part of the S&P 500 and have been raising their dividends for at least 25 years. And in this case, Medtronic has been raising much more than that. There's a 5 year growth rate of 8% with a payout ratio of 44.84%. Track your dividends gives Medtronic a dividend score of 80 and considers it undervalued by 22.93% with a fair value estimate of $120.05. Morningstar considers Medtronic a 4-star stock with a fair value of $129. But as for my calculations, I found Medtronic to be undervalued by 33.66% with a fair value of $123.66. I do own Medtronic in my M1 Finance portfolio and do intend to add to it at current levels. In the last 1 month, Medtronic has returned just over 3.5%. It's too good a company to lay low, and that is what is making it appealing even in this current run up that we see in the market. So these are the 5 stocks which we just discussed. To summarize, they are BlackRock, Medical Properties, Medtronic, Starbucks, and Morgan Stanley. As we just saw, all of these 5 stocks are very undervalued at the moment and hence offer a very good buy point and should continue to give good results going forward. Hope you found this video valuable, and I would really appreciate if you could hit that like and subscribe buttons and help YouTube recommend this video to many more out there. Until we meet in our next video, let's try to do as much as possible to be financially healthy. See ya. Bye.